Hello and welcome to Money Markets and More, coming to you today from the slopes of France where I've been skiing, and despite the fact that there has been hardly any snow, you can see the weather. The skiing has been surprisingly good. You can just see one of the pistes there behind me. Today we are talking about lithium. Should we be investing in lithium, or is the bull market over? Is it game over? Before we begin, I just wanted to plug a couple of things. First, my Substack, The Flying Frisbee. If you haven't already subscribed, please do. I'll put a link in the description. It's going great guns, and eventually I'm going to move this channel over there. Everything I post on this YouTube channel has normally been posted on Substack first. Secondly, if you are looking to buy gold, and I think everybody should own some, consider the Pure Gold Company. I'll put a link in the description. Premiums are low, quality of service is high, you can deal with a human being, and I have an affiliation deal with them. And thirdly, I have a gig coming up in the West End of London in May at Crazy Coq's Piccadilly Circus. Fantastic venue. The last one was really good fun. That's me wearing my comedy hat, so please come to that. There are links to all in the description. So, I've seen it happen with so many niche commodities: potash, graphite, antimony. I'm out of breath walking up the mountain. Rare earth metals, cobalt, vanadium, and I'm pretty sure it's happening again. There's some substance, a substance you've barely heard of. Suddenly it is essential to some new technology maybe, which is going to save the earth in some way, but nobody's producing it. Why is nobody producing it if it's so essential? Because prices were so low for so long. But then prices start going up because everybody wants this commodity and nobody's producing it. Suddenly a load of natural resource companies which aren't going anywhere, especially in Canada and Australia, they pivot, they change their focus, they start exploring for said commodity. Some of them acquire some sort of half-explored development projects and re-drill them. Investment capital piles in. Some of the above companies actually make discoveries that start producing. Existing producers up their output, and within a few years there is a surplus of said commodity when once there was a shortfall, and the price comes back down again. The more it went up, the harder it comes back down. And when they do come down, those companies that aren't profitably producing, they hit the skids. Those that are producing have to tighten their belts, and the bull market has morphed into a bear. Nothing fixes high commodity prices like high commodity prices, runs the adage. And if you can time these cycles well, you can make a great deal of money, but you can also lose a lot of money. And I think we're seeing one such turn, or maybe we've even just seen it right now in lithium, perhaps even in the broader battery metal space. Fossil fuels are destroying the planet. Electric vehicles are the answer, but they need lots of lithium. Yes, who makes lithium? I don't know, but the price is going up. Quick, let's invest in lithium. Let's start a lithium company. Lithium's going to save us. Tesla can't get enough lithium. Elon Musk is going to buy a lithium company. Lithium, Tesla, EVs, net zero, climate change. Bubble! Now, much as I love niche commodities for these repeating cycles they display, I kind of missed the boat a bit with lithium. There was a sort of early bubble. I didn't catch the early phases of that. Had a good run in maybe 2016, 2017. Then in 2018, 2019, the lithium companies had a miserable time of it. I felt somewhat vindicated that I hadn't got involved. But since the COVID lows of 2022, they exploded. And I kind of missed that one too, as I was away with other commodities. I felt it was too late to join the party. I sort of clicked my tongue as the price went up without me. Clicked it even more as the bull market went on for longer than I thought possible. And then I watched with a certain amount of confusion because the companies pulled back, but the price of lithium carbonate kept on rising. And that is not normally a good sign. In any case, now the price of lithium carbonate has stopped rising. In just a couple of months it's lost over 30%, having risen tenfold. And the lithium companies have been even worse. Now, lithium is not that hard to produce. Many of the problems are regulatory because of, lithium can explode. But there was a frenzied rush by electric vehicle makers to secure supply over the past 2 years. That sent lithium prices to the moon. Whoever could get producing first would win the race to secure the contracts. Slower movers would suffer. And that was how it worked. Then late last year, China announced that it was going to halt subsidies for its 87 billion industry, and demand for electric vehicles just dropped, just as the new lithium supply started coming on stream. And there's now a lot more supply on its way from China, Chile, from Australia, from North America, and that's only going to send prices one way. Australian supply alone is set to rise by 32% this year. Now, lithium giant Albemarle, that company said that car sales were a temporary weakness given the early Lunar New Year in China. I'm just not buying that. A friend of mine, Simon Catt, asset manager from Arlington Capital, sent me an email the other day. There's a 12 billion market cap Australian producer, Pilbara Lithium. And last week it announced that their latest shipment of 15,000 tonnes of 6% spodumene concentrate was unpriced. Unpriced! Hold the phone, he cried. Then you've got Chinese battery giant CATL, the largest Chinese battery manufacturer, is selling its batteries at little more than cost to automakers. And this discount includes an assumption that the prices of lithium carbonate are going to fall by over 50%. Goldman Sachs just put out a report titled Lithium First Leg Lower, noting a lot of what I've just said and more. Chinese lithium demand is down 52% versus the 3-month moving average. Production is unchanged. And prices have more room to fall before spot demand recovers, in our view, says Goldman notes. There's the end of subsidies, falling EV sales, falling spot prices, falling demand from EV battery production, rising EV inventory, all putting a further damper on demand, and there is rising supply from China, Chile, Australia, North America. It would seem the battery wheel is come full circle, if I can misquote the great man. Now, I'm not saying this is the end of lithium demand, nor is it the end of the electric vehicle. Both will play an enormous part in our futures. But my hunch is that this is the end of a 2-year bull market that saw lithium carbonate and spodumene up many times over, 10 times over. Supply can now meet demand. The market has solved the problem in the market, and now the market has another problem, falling prices, and it will solve that too. And so the commodity cycle turns. Thank you very much for watching. Please subscribe to the channel. Check out all the links in the description to all those things I mentioned before, my Substack, how to invest in gold, and about the gig I've got coming up in May. I'll be back with another video very soon. Until then, from the lovely Alps, goodbye.